Well, another busy buying day. Not so much sales, but market's still up. Let me edit some of this stuff here so everybody's on the same page. And today, what we have, add these in here: CMP, SPB, MS, MSM, WBS, and WN, C, and AL. And we had one sale of AEP. We don't know what's going to happen for the rest of the afternoon, but we only have about a half hour to go or so. But single sale there. All right, yep. So if you're new to the channel, you're more than welcome to follow the trades, but if you don't understand the strategy, you might be over leveraging yourself in any one trade. So if you have any questions, before you make any trades with what I show, please, ask some questions. I'm not a financial advisor, but if you don't understand the strategy, I've had some people say, well, why don't you just buy 100 shares of that? And it's like, well, you got to understand scale. You got to understand risk. If you don't understand those two, following somebody else's trades, you're going to get yourself into trouble. I can make consistent profits every day, and I'm just showing you small accounts here. So if you have a small account, this is how you test yourself. You're not going to test yourself with fake money. The market, it's like putting your money in the bank, right? Stock or the banks, I don't even think they pay you percent. But it's important that you understand that before you start, just throwing your money around. But either way, it's good to learn new stuff. I'm not the only one that has a strategy out there. I'm very consistent. If you want to know more about it, I do put out scans every week. A lot of the people that follow me, they may or may not watch the videos. They understand it, and so they can make profit, consistently and not worry about their money. If you're debt free, you're in a better situation. If you're just starting out, you're young, get some money together, get debt free, and then start investing. But my only advice would be, if you're not debt free, get out of debt, because when these interest rates start going up, yeah, you're going to get hammered. But let's see what else we got going on here. So we can look at a couple of these since we've got time. Yesterday was kind of crazy, but let's see. CHY, which one did we? I was looking at, so this is basically 7 days, right? So this goes back to, what, the 15th. So that's the start of the week. So you can see no sell, or I'm sorry, no losses. That would be in red. Don't ask me why they put it in blue. I think you can change that, but I've always liked the blue. Had it like that for 25 years. These charts aren't, or these portfolios, I mean, they're hard on the eyes if you're not used to them, so get used to them. You can say this is another one. Not as many trades on that. Obviously, these accounts are smaller, right? So it would make sense that you wouldn't have as many trades. But the whole time, every one of these is collecting dividends, right? Now you can probably find one or two in here that may have been in these accounts for a while. We keep these accounts small so that we can show people how to manage their money. If you're trying to manage a $500,000 portfolio, we're using the same strategies. We're using the same risk management. We're using the um, the same scale on our trades. The only difference is we're using a higher percentage. Right, when we get up into the over 100,000, we'd be using 20% of max shares. Now we come to these numbers. We put a lot of time and effort into a scan that allows us to uh, figure out, how much we want to risk per trade based on the size of our portfolio. So we're not overextending. We're not buying, 1,000 shares of something and having one thing in our portfolio and just sitting there waiting for something to happen, right? Now, sure, you can make dividends, but that's not the whole story. Um, let's see if I can find that little chart that I put together this morning. Of course, I closed it, so I need to find it again. And there it is. Yeah. Okay, so this is an interesting chart. So when you sit here and you look at this, let me drag this down a little bit so we can see everything. Okay, so we just picked a start date on here to start doing it, so it was like the 25th. It's not to make it look any better or whatever. You can see that there's a day here profit that there was zero profit, and here's a day that there was zero dividends coming in, and yesterday there was another one, zero dividends coming in. But cumulative, we can see that the accounts, all three now, these are all three accounts put together, right, are producing 576.20 in how many days? Looks like so 16 days, right? We still hadn't closed at this, and we'll put that number in. We just add about, what, 17 bucks in there. But you can see what's happening. See, if you're only concentrating on dividends, right, all you would see in your account, if you just bought one stock, would be the dividend amount. Maybe if it was quarterly, maybe it hits, maybe it doesn't in this week, right? But what we're doing is we're collecting dividends because we're spread out everywhere. So what's happening is you're accumulating that money faster. You're not having to wait 90 days or 1 month if you're using CEFs, if you're being paid monthly. So the whole idea, and see now when you start trading it, right, you're increasing your amount of occurrences. So each day is an occurrence, right? So within that day, you've got numerous occurrences. On this particular day here, we had zero occurrences, meaning we didn't have any sells for profit, right? And here, we didn't take in any dividends because, for whatever reason, the account, didn't disperse, or interactive brokers didn't disperse dividends to the account. So we couldn't use them, right? So you just keep track of everything. And I'm breaking this down into micro things so you can understand how powerful a small account can actually be, or accounts. So if you've got one account, it's going to grow slower. And obviously if you've got a little bit of money, right, let's say if you can get into the stock market with $5,000-$10,000, you can profit, but just don't be thinking you're going to make $1 million overnight. That's speculation. You're not going to make 100% on your money. You can look at this and say, okay, well, at the end of this term, let's just say we go from the 25th to the 25th, or let's just go to the end of the month. We know that we profited so far yesterday of 1259.16. So we can divide that by how much money we actually have in all three accounts and then come up with a percentage. So if we're making 1% per month, that's 12% per year. I'm just throwing a number out there. I don't know what it's going to be at the end of the month. I don't project anything. I don't say, hey, this is what it's going to do. We let the market come to us, because if the market starts going down, what happens to this profit column? This profit column, obviously we sell when stuff goes up. So if the stock market starts crashing, the only thing we're going to be able to do is collect those dividends, right? So we're almost on par, right? It's like a 50-50 split. This strategy makes sure that when we're in good times, we're doubling up the amount of money that we're taking in. In bad times, we're making 0.5%. That's still 6% per year. Once you figure out what Warren Buffett and all the other guys are doing, you can partake in this. It's just they're using larger numbers. That's the only difference. But if you think you're going to get there by speculating and hitting home runs, hey, all the more luck to you. But chances are you're not going to do it. These pros know how to take your money. So concentrate on making as many occurrences as you can, even with a small account. I'll leave that up there for a little bit, but um, it's important that people understand this before they start trading it, because if you start trading it your own way, I can tell you whatever stock to buy, and I wouldn't know what the heck I'm talking about. But I know that through our research, that everything that we come up with gives us the best opportunity at making more occurrences. We only buy those stocks that pay dividends, and we have a threshold of $1.20 per year per share. That might not sound like much, but we've run the numbers, and if you can make 10% per year, just take a look, go over to Stock Gurus and look at the size of the portfolios that the pros use, not their size, but what their returns are. They're making 10%. So if they have $500 million invested in 7 years, that's $1 billion. That's how much they'll take home. Okay, they'll double their money every 7 years. So if you want to start, if you're young and you don't believe this works, look at what the pros do. You can double your money, and if you're never taking losses, we figured out a way to not take losses and stay in the game. You're going to take a loss somewhere along the line. I mean, we're looking at 287 days without a loss. That's across 14 different accounts. And we only show the 3 here because we're not at liberty to show everything that we do. But these smaller accounts we can show, and we'll try to keep them lower and take cash out if we need to, right? And just not, trying to keep these growing. That's not the purpose of this. We want to try to show people how to do this correctly. But your whole thing is to try to get your account up. Just keep growing it and growing it and growing it and growing it. This whole thing about, buy and hold, yeah, it can work, long term, and you can accumulate all those shares, but if you never take profit, you don't know when that crash is coming, and your portfolio could be down next to nothing. If you never sell it at a low, and take that loss, then you never realize that loss. But too many people get scared and they jump ship. We don't do that. I've been through a lot of different moves in the market, and I've been doing this for 25 years. So, well, longer than that, 27 years, somewhere around there. Anyways, you'll see all kinds of weird things happen in the markets, but the whole thing is, if you're willing to put in the time, it doesn't take a lot. It's just understand. The time comes in understanding how to manage these portfolios. If you don't understand that, it doesn't matter what strategy you have. You can use any of these chart tools and whatever. You'll be chasing that holy grail for the rest of your life. I see it, and people tell me, well, what about this? And I said, well, that's fine, but what's your profit target? How much money are you going to make? What's your strategy? What's the percentage that you need to double your money, and what's your time horizon? If you're young, you want to try to, maximize your gains and try to build a portfolio. Most young folks aren't going to have a lot of money, right? But by the time you're 30, if you had $100,000, by the time you're 50, you should have $500,000. And that's 50 grand a year at 10%. Another 10 years, when you're 60, you have $1 million. I'm just talking like anything can happen, right? But look what Warren Buffett did in 60 years. Billionaire. So your scale just keeps going up with the size of your account. But if you put too much into any one product or company, it's going to hurt you. That's the only thing I can say about that. All we're doing is checking to see. Looks like that thing painted there, didn't it? You see that a lot, and all that means is if you see it, the price go up, goes past your sell limit, just means you're way down the list. Like we're only looking on load 2, right? So there could be a list of 500 different positions, 500 different people want to sell theirs, and you just don't have enough buyers to close that. So it's important you get that order in early so that when it does paint, and I put mine in pretty quick, so it means there's probably some pretty big orders there. But yeah, you start to see things where they like to call it exhaustion, whatever. I mean, you can use all that terminology and you can use all the tools. I mean, I've had some trading platform that I can link to Interactive Brokers, and that has got, I don't know, 500-600 different tools. They don't do anything to help you make money. They just help you to visualize things. Charts themselves, we could get rid of these charts and just concentrate on the portfolios. You can do the same thing. It's just easier to get your numbers together when you need to make that trade. So in this case here, we're looking at dollar cost average, right? It looks like back here in February 15th or 16th, somewhere in that week. These are weekly bars, by the way. In this week, we assumed a position. This is a CEF, right? So we like these monthly payers because we get this pay every month, right? Now it's not a lot, but multiply it by the numbers. If you've got a lot of CEFs, you get to partake in that move, or you get to partake in the dividends. The moves aren't very big in these, but this one travels, well, if it comes down here to 32, we'll probably end up with an average of around 37 for 10 shares because we're looking at adding 5 shares, right? So it's going to come up here, but we're still targeting the same amount, whatever that dividend amount is. So it's $2.05. So 10, we're looking to hit $20.10. Doesn't seem like much, but you keep repeating this. Once your accounts get larger, people scoff, oh, that's 20 bucks. That's like, well, hell, that's a stake, well, stakes are going up, but saying you could buy, 3 steaks down at Walmart for 20 bucks, It's just one way to look at it. But if you keep thinking, well, why don't I just buy 1,000 shares? It's making, 6%. And I said, well, you can do that. But what's your objective? You're just going to make dividends 6%. 1,000 shares would be, you make $2,000, right? Because it's $2 per share per year, and you can make that money each month. Now you can do that. There's nothing wrong with that. But remember that chart I showed you. All you're doing is collecting dividends. You don't know when you're going to sell it for a profit. I'm telling you, you need to take profits. You take profits up, down, doesn't matter as long as it's a profit. Wondering if this thing's ever going to take off. Here's this little lottery ticket. Looks like it's bumping up against. Oh, looks like we got another buy. This was on the list yesterday. And where it was at JPM. There it's on the screen now. Just happened to be in that account. So we bought one at 155.09. And we're targeting $3.60 in profit. And we only have one, so we add the dollar to it. So 159.7 is our target. All right. Got it. So let's take a look at the chart. So you can see it was down, came back up. We sold. right at the end of the day. Got about 9 minutes to go. All right. You don't have to watch this all day. This is the beauty of this. You come home from work and you're like, hey, I sold 2 today. If you followed what I was doing, you follow the scan. If you understand it, you come home, you get a couple extra bucks. If you're making 10 bucks an hour, let's see, SPB, right? You're making 10 bucks or 15 bucks an hour. You already made an extra 2 hours worth of work. Let's see, where's that at? There it is, SPB. All right, everything's taking off here, TRV. So we look at SPB. So that profited, well, wrong account. We got another $3.40. So it just keeps moving up, right? Because we're not taking any losses. So if all these things go down, we're collecting those dividends. We get, if we're making 10%, now we're making 5% for the, in a down year, you're making 5% in a market that's not, going up. And we look at this portfolio, right? If it's at 787 and you're even now it's going down, this value, your dividend yield goes up. That doesn't mean you're going to make more money as it goes down. You're going to make what you had because you're not selling anything. Now, dividends can go down. I'm not saying that they can't, but they can also go up. Most of the time, they stay the same. And we're getting a lot of action here at the end of the day. So let's stay on top of it. JPM, we already have that one in there. I need to go back over here to SPB and clean that chart up. SPB. Looking at that just before we went live. So we bought that yesterday, or well, it wasn't today. It was probably yesterday. See, it's off a little bit, so it's probably yesterday. So we'll clean this chart up. And the scan is done for the week, so we're not worried about it anymore. Whatever sells, sells. Whatever buys, whatever trailing stops we had or trailing buys that we have in, we leave those on. Now, any limit orders that we have in, we'll close those out. But the trailings, that's meaning things are dropping, so we don't really care. We're willing to put those in the portfolio because they're at better prices. So 340 on SBP. Let me copy that and post that to Twitter. Okay, chart image, SPB. Over here at Twitter. Sold SPB. I had quite a busy week. Open. What was the percentage on that one? 1.9. What was that other one? Okay, yeah, we only had 2 sales this afternoon since this morning. So now we need to look at TRV. Where's that at? Let me look on the scan. It's still in play. TRV. That might be a duplicate alert. Let's see. TRV. Yeah, it's just hitting another alert that was on. Let's see if there's anything else. No. So we have a trail in. So that's going to stay in effect. So that's a really good pullback on there. We're already $4 ahead of the game. Trying to get stuff on sale. Okay, so TRV and then Hub. I think that's Hubbard, something like that. I don't know. I really don't pay too much attention to the companies anymore because if they're paying dividends, they've got to be making money. You can't just pull it out of thin air. Okay, so Hub. Yeah, we're willing to put one in on that as well. So we got max shares at 10. So it's obviously 1. because these accounts are small enough. Buy 1. And we're going to trail that. What do we got here? 362. Yeah, we like that. Save some money on the trade. All right. So barring any other buys, we got about 3 minutes. We've had a fairly good week. Got our inventory back up a little bit. Quite a few buys this week, and you know, nominal amount of sells. But you know, it's always, I can't say that there's a specific number that you need to hit because it's based on how much money you've got in your account. It's always good not to be all in, so you can buy when things go against you. The whole idea on a small account, I mean, all you have to do is scale this up. If you had 30% of max, then just double this amount in this one account, right? Plus, the account would look a little, it would look a little bit different. So if you had 300,000 in here, or 200,000, you'd be at 30%. So you would have gained 60 bucks on the day. But you don't know how big, you know, all your other positions would be 3 times as big. So you have to take that into consideration. It's just a scaling effort. Once you get that in your head, your trading will take off. Looks like the Murphy oil is finally starting to, yeah. Still hasn't got any better on that. See, we're at max, we're over max share, so we can't add anything to that. USO, not much going on there. But yep, we just let the market do what it's going to do, and you know, we have our, we know where we're going to be. We know how we're going to manage our accounts. We don't go all in. We don't have any YOLO plays. And we're not worried about missing out, so we don't get FOMO. We just stick with the plan, take in dividends, make our trades, grow the accounts. Okay, so this overall account today grew by 13, 11, 21, 34. Let's see, 1794 plus 340 plus 111, 76. So 131.10 is how much the current account grew by today. That's after commissions. We've already paid our commissions. Right? And if you don't have an account, such as like E-Trade or TD Ameritrade, TradeStation, any of these that don't charge you for equity trades, you won't have the functionality that you would have on Interactive Broker. It's just you have to know, you know, how to ratio your or build in your limits based on, you know, because you got to have $1 per trade. So yeah, they're making some money too, but I mean their platform's great. It makes me happy to be able to trade quickly. I can't trade this fast on all these other platforms that offer, you know, zero. So, you know, there's just little idiosyncrasies, and once you actually start making money, $1 per trade is nothing. I've been being paid $1 per side for, I don't know, 25 plus years, and everybody was paying, I remember 7 and 14. It's like, oh my God. I was like, how did you make any money on that? And they don't, you know, so what do? Oh, I got to buy 100 shares. There's no way I can make any money. It's like, well, if you had listened to me, you could have been doing this the whole time, and you could have been saving $13 per trade. But, you know, and then finally they got down into the 5s, and then they just said, oh, screw it. You know, we want everybody's money in our accounts. We don't want the banks having it because they ain't going to pay you any money. So they figure they can make money off of whatever cash you're bringing in. But most people end up getting greedy and they start playing the derivatives markets. And there's nothing wrong if you know what you're doing to play them, but it's really hard to make money in those markets. And it's a full-time job. If you think you can, there's a lot of people that like to sell premium, and yeah, they do okay at it, but um, I've got some friends that swear by it, but they always talking about that big loss they took, and it just wipes out all their gains. And I just keep, you know, over the years, plugging forward and saying, yeah, well, you keep on doing that. Eventually, you either wake up or you don't. But majority of the people get into that betting frame of mind. I don't like betting like that. I'm not betting at all. What I'm betting on is I'm going to not take a loss. That was the whole strategy, is never take a loss. So I don't take losses. That's why I don't play the futures, and I don't play. I mean, if I had $10 million, I'd play the futures, because you could sit there and just play around. There's a couple guys online, can't remember that one dude's name. I think he's got cancer, and I've watched him trade, and that's exactly the way I would trade him, but I don't have that kind of pocketbook. I don't know if he's worth $6 or $10 million, but I mean, he's willing to, go into, be on the wrong side of that trade for a long time until it comes back and he gets paid. But, the small trader, it's going to wipe you out. They'll close your account down because you're trying to follow somebody like that and you don't have enough bank. You don't have enough margin. And if you don't understand margin, before you even trade a derivative, you better understand it, because they will come for they'll come for you. You don't just have to lose what's in your account. They can come after what's in your bank accounts, and they will do it. That's one thing about the derivatives markets. You sign up for it, you basically say you know what you're doing. And if you don't know what you're doing, you told them you did. I'll have you sign all kinds of documents. So don't do it until you understand it. That's a good statement that I put up here. I'll leave that one up here on PRK. The reason most people uh, fail is because of their scale. The size of their trade is not in line with the risk and the size of their account. That is so true. You can see a lot of positives on here. But anyway, that's pretty much it for today. Hope everybody has a good weekend. If you're watching this after hours, take your time. Put it on slow if I move too fast. There wasn't anything really big going on there. Just a couple little sells and a couple alerts came up where we put some orders in. But other than that, have a good weekend. And next week's going to be kind of crazy. I'm going to be back and forth. I got to travel a little bit, but I'll be on Monday. Don't know. I don't know. I won't be on Tuesday. I'll probably be back up on Wednesday. So Tuesday is going to be an off day. Wednesday, Thursday, and then I'll be off Friday, and I'll put the scans back out on that following Sunday when I get back home. Other than that, take care, and I'll talk to you later.